What's up, everybody? It is Sunday, December the 5th. I hope everyone's having a wonderful weekend. It is a snowy one here in Toronto. It's about 5 p.m. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. Now, I do have a ton of notes. I hope I can get it all in a reasonable amount of time. If not, well, then I'm going to cut it short. You can also follow me on my IG and other profiles there where I'll have a very quick 60-second sum up. But let's talk about the markets, because last week, oil specifically on Friday had started off quite positive before it pulled back a little bit. Now, there is a lot of information coming out from OPEC saying that they'll do whatever is necessary in terms of production. However, their comments also finished on a positive note as they seem to be expecting a very steady demand in January. So we're going to say that OPEC probably isn't going to be cutting back very much anytime soon. Now, if we take a look at other areas of the market, JP Morgan apparently right now is calling for a buy the dip scenario. Now, I'm a big believer in this case in buying the dip. Funny enough, I don't normally agree with JP Morgan, but in this case, I do believe in buying the dips, and so I am doing so. However, investing.com does mention that small caps are considered very much undervalued. Now, I'm not going to necessarily disagree in this case. However, for me, I'm going to look at large cap dividends specifically. You can expect a little bit less volatility with the large caps, and they're going to pay you to hold their stock. But NASDAQ is currently sitting in a bit of a bearish pattern. So I would be cautious still holding on to tech. If you're day trading, maybe that's a little bit different. You can find opportunities, certainly. However, for myself and for my long-term positions, I had liquidated all my tech and may re-enter this coming week depending on what I find, only because, again, I'm buying the dips at this point. Now, why am I buying the dips? Well, a couple of reasons. The main one is that I don't believe the Fed is going to be doing any tapering whatsoever to help control inflation. I also don't believe that the Fed is going to be raising rates anytime soon either. They're in the business of buying everything, producing debt. So for me, I'm going to take this as a positive. I am buying every dip I can. And that's not just in equities and tech equities. It's also in crypto. We've seen crypto take an absolute massive hit in the last week or so, 7 days, where we've seen Bitcoin drop about 20 grand. Now, again, over the last 7 days, I think the only two major cryptos that have done any positive movement are Luna and Matic. Both of those have done quite well over the last 7 days. But overall, the rest of cryptos, just like equities, have been taking a shit. Now, why don't we take a look at precious metals, because this is a conversation that isn't really covered too often, especially by major equity holders. Now, gold did have a positive day, did finish in the positive. Same with silver. Now, overall, there is still a little bit of pressure on gold, even though a lot of money did move into the metal over Friday and a little bit of the last week's trading week. Now, that being said, I do expect momentum for gold to continue to move upwards as we see continued volatility in the markets. And I think that's going to be a major thing this week. I think we're going to continue to see significant volatility, especially as this new virus takes hold and is now, I believe, detected in as many as 15 states. So with that being said, I think we're going to see continued volatility. However, I think by the end of the month, equities should start to go back into a positive momentum and carry on into the new year. But back to precious metals. So I do think gold is going to continue its positive momentum, even if we see a slight slowdown the early part of the week. Silver is still excessively undervalued, sitting in 22.5. Platinum, however, has seen the biggest loss, and I think platinum might be where you may want to start taking a look. Now, I'm not talking about miners, because platinum miners are not friendly, I guess you could say. However, I am talking about the physical. So even things like looking at Christmas presents, things of that nature, or whatever you celebrate. I have already made my purchases for this year, taking advantage of the low silver prices, and I typically do like to give silver as presents. So just food for thought, even though I'm also a stacker and do have significant silver positions, gold, and a few platinum as well. But taking a look at the overall market, I do see a flattening yield curve And it's kind of coinciding with a little bit of reduced risk in the market. Now, what does a flattening yield curve really mean? It's just indicative that the markets, or as far as the economy is concerned, is not very strong. And we did see that a little bit last week with some reporting. This week, we do have on Wednesday some additional reporting as far as economics are concerned, and we'll see most likely some numbers that aren't going to be too impressive. But generally speaking, I think this week we're going to see continued volume, continued increase in volatility. We're going to see an increase in volume in very particular stocks on the sell-off. There's going to be some opportunity to get into tech if you're still looking to buy in. I'm going to be personally watching Tesla this week. However, I'm going to ask that you exercise caution, as I do feel that the markets are going to be still quite volatile. But that's it, everybody. Positive for the rest of the week, but generally speaking, volatility will be high, risk is low, inflation's still out of control. We'll see what the markets feed us. That's it, everybody. I hope to see you at the opening bell.